Pharma is one of them, and Ekta is here to tell us why she's tracking that. Ekta, over to you.
Well, definitely a weak set of numbers when it comes to margins for Ajanta Pharma. So it's coming at a multi-quarter low of around 20.9% versus 29.7%. The street was anticipating at least around 25% this quarter. Now, in terms of the profit, that also was impacted because of the weak operational performance. Revenue was up, however, by 6% The street was anticipating around a 7% growth. So that was largely in line with estimates. India was strong, so it was up around 25% year-on-year plus. Asia was strong, it was up around 30% plus. US was weak, so that was down 5% on a year-on-year basis, and the institutional Africa sales was down around 50% year-on-year, so that really brought down the overall performance. Now, in terms of a couple of key takeaways, the margins the company did say was impacted by raw material freight costs, price erosion in the US, preponement of certain costs. However, what could probably cushion the stock today eventually, or maybe in the next couple of trading sessions, is that the company is confident on guidance. They have guided for around 26% margins, and they expect Asia to grow around 20% plus, India to grow in high teens as well. Brokerages such as Motilal have maintained their buy call, so target price 1560 there. They've cut their FY23, FY24 estimates, however, to factor in lack of launches in the US market and moderation in growth prospects in Africa. Incred maintains an ad with a target price of 1439.
Okay, thanks a lot, Ekta, for that. So that's on Ajanta Pharma, but let's just quickly get a handle on what's happening with Hero MotoCorp and why it's the biggest loser on the index right now. That's because of the earnings that Hero reported. Now, the revenue growth was fine. It was decent, about 7%. The problem really is